Hey, everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, let's take a look at the charts here because we're not seeing much price action as yet. And, some people were anticipating that once we heard the Fed make the announcement of a rate cut, that the markets would officially rally. But as I've been telling you guys, that's not a fundamental part of the market. That's not what drives markets. It's more of a narrative and a psychological thing for retail investors. But the factors of what we've been following are global liquidity, and all the support levels are there for the bull market to continue. So we're still in the bull market. We continue to see global liquidity making new highs. So we really have to be patient here. I know some of you are getting impatient. You want your coins to pump. The market seems to be boring you. But that is usually a good sign. When the market turns boring and people are losing hope, that's actually a very good sign. It means the whales and the market makers have done their job. They've either put you in a boredom phase or fear, and the market always does the opposite of what retail feels. If the herd is getting bored, they're saying the top is in, or this stuff really sucks and all that, they're losing confidence. You know what's coming next. So this actually makes me feel bullish. And I can only say that having been through multiple bull and bear market cycles, understanding sentiment, understanding what the market makers and the whales are doing. So, folks, everything is still on track. Bitcoin, it had pumped up to $117,000. But one of the things I've been saying over the past couple of weeks, folks, is that I don't like what I'm seeing on the weekly chart. Now, it doesn't mean, once again, the bull market's over. It's just that we could still see some more volatility to the downside. And don't be surprised if there's a quick flush out before we find the bottom and start moving. The reason I'm saying this is on the weekly chart, the MACD shows the bears are in control. I've often said, hey, look, the bulls are in control. You can see the MACD's in the green. Right now, it's in the red. So just be cautious, just anticipate the potential for some quick flush out before we rally to new highs. So we really, really have to be patient here. But things are moving along. There's S&P 500 and NASDAQ all making new highs. All of this following global liquidity. We saw gold was ripping, for a good amount of time. Now it seems like it's the stock market's turn, and then Bitcoin and crypto will have their turn because we're in a macro bull market for all assets, of course. So just be patient. USDC tether dominance continues to show that we haven't broken down where that liquidity will start to enter in, and we see the next major rally. In addition, Bitcoin dominance, while it is in a downtrend, it is currently moving sideways. So this is not unlike anything we've seen before. We just got to be patient. That is the thing that trips up a lot of people, but institutional investors know the game. They know they're looking at all these metrics and they can play the waiting game, right? While retail is mostly emotional. So this is why I keep harping, don't be emotional, be educated, right? We want to make sure we are looking at the right data and signals and much more. Now, something that could drive some additional liquidity into the market is that FTX Recovery Trust to unlock $1.6 billion for creditors in the September disbursement. So the FTX Recovery Trust, the entity overseeing the distributions of funds from the bankrupt crypto exchange, announced a third tranche of distributions to creditors worth about $1.6 billion. As I've said in the past, some folks who are getting their money back may put it back in the market and some may not, right? But once again, it's plausible to say that some of this liquidity will come back and folks will try to catch the bull market and make some returns, after their funds have been stuck for a long time. So let's keep an eye on this and let's see what impact this has on the market in addition to global liquidity and other things. Now, look at this news, folks. XRP and Doge ETFs smash records with $54.7 million combined one-day volume. So the Rex Osprey ETFs for XRP and Dogecoin went live yesterday. And folks, as I've described in the previous podcast, this is a very different model and a way of going about it that Rex Osprey took. It's not the traditional setup that we've seen with the other filers under the 1933 Act. This is under the 1940, where you create a C Corp. They did this for Solana as well, Rex Osprey, that is. So they did it for XRP and ETF. And look, as I said, I think it was a smart move on their part, and they can always convert it back to, let's say, the 1933 setup. So the Rex Osprey XRP ETF recorded the highest debut volume of any ETF this year, surpassing $37 million. Wow. The Doge ETF registered a volume of $17 million. So, folks, there's demand for XRP clearly. This market cycle is very different for XRP. It has been one of the leaders in the market as far as altcoins, seeing a lot of liquidity. I've been sharing the charts with you guys, telling you the setup looks incredibly bullish. There's a ton of filers for the XRP spot ETF. The SEC Ripple case has been completed. That's a huge narrative. So you have a flip of the sentiment. And we've been seeing that the futures have actually been performing really well on the CME. But in fact, Coinbase today, they said in just 1 month, Solana and XRP perpetual style futures have scaled exponentially. They said $1.9 billion in notional volume, 1.6 million plus contracts traded. So again, there's demand for this asset. And in addition to the SEC case being wrapped up, we talked about in yesterday's podcast, a lot more tokenization and building is happening on the XRP ledger. Now, some people are going to get emotional and triggered, but we're about the facts here, right? I'm sharing straight up facts. Yesterday, I broke down the data on RWA.xyz that we're seeing a lot of tokenization. The news of DBS and Franklin Templeton building on the XRP ledger, that was announced yesterday. So those are the facts. So that's why I believe XRP will be one of the top performing assets in this bull market cycle. And look, I'm diversified. I hold Bitcoin, Solana, Ethereum. So other assets are going to do well also. I'm just highlighting the reports and the facts here. So I'm not married to any coin. I'm just here to make money. So, people get emotional. Bitcoin maxis, they get all emotional. I'm here to make money, man. You guys can have your religion and all your nonsense. I'm here to make money. Now, look at this news. We got the first XRP backed stablecoin here. So, Enosys, they tweeted out, "We are thrilled to announce the upcoming launch of Enosys loans, a friendly fork of Liquity V2 by Liquity Protocol deployed on Flare networks. This marks a historic milestone in the DeFi landscape as the first ever collateralized debt position protocol to leverage XRP as collateral to mint a stablecoin." We are seeing adoption of XRP and XRP Ledger. This is huge. Flare co-founder Hugo Filion said the first XRP-backed stablecoin, Enosys friendly fork of Liquity V2, will allow you to mint stablecoins collateralized to your FXRP and then put those stablecoins to work to earn yield, make payments, buy NFTs, use collateral, lend out. The sky is the limit. XRP-backed stables, fully decentralized and on-chain on Flare. Now, I don't know if many of you saw, but I published my interview with Hugo Filion earlier today, and we talked a lot about these things with enabling staking for XRP and a lot of DeFi components with FXRP and the timeline for that launch on mainnet, as well as other assets like XLM and Litecoin and Bitcoin and Dogecoin and much more. So lots of building happening. These are the facts. So I know I'm repeating myself here because I know there's going to be people in the comments, XRP is a scam. No one's using XRP. No one's building on XRP Ledger. Yet I'm giving you the facts, right? No emotions, just, hey, here it is. I'm serving it up to you. It's your decision what you want to do with that information. But I'm bullish on XRP, and I see a lot of demand from institutional investors via the ETF and the futures markets. So I think when the spot ETF is approved, we're going to see some really nice fireworks. It's going to bring a lot of inflows. And remember, the spot ETFs, they have to hold the respective asset, the underlying asset. So just as the ETF inflows for Bitcoin and Ethereum helped with the price appreciation of those assets, it will do the same for XRP. And look, also Solana, right? Because Solana spot ETFs, I believe, will be approved because there's futures already in the market. So guys, the bull market's not over. We are going to see these altcoins rally and hit new highs. Just got to be patient. Now, folks, quick word from our sponsor, and that is VeChain. VeChain is one of the top layer one enterprise blockchains out there, folks, and they're getting a lot of adoption from big brands and companies around the world. I'm a VET token holder. I have been since 2018. I'm bullish on this project. Some of the key features of the VeChain blockchain includes it's secure, affordable, scalable, fast, and sustainable. Some of the brands and companies working with VeChain include Givenchy, Walmart China, BMW, Boston Consulting Group, PwC. They're also partnering with Dana White in the UFC. Most recently, Dana White said he bought $1 million in the VET token. So they're doing a lot of great things. They even recently launched staking via Stargate. So once again, I'm a believer in this project. I am a token holder. I have been for years, and I see a lot of potential here. So if you'd like to learn more about VeChain, go to vchain.org. Link will be in the description. Now, the ETF news continues. Grayscale submits a revised S1 for Dogecoin ETF as the New York Stock Exchange ARCA seeks to modify the firm's Ethereum trust. So a lot of these filers are preparing for approvals from the SEC and they're updating their S1s and much more. This is a very good sign. Now, yesterday's news, I told you guys about the SEC approving Grayscale's digital large cap fund, which includes the top 5 crypto assets. That is Bitcoin, Ethereum, Solana, XRP, and Cardano. I actually interviewed Grayscale's head of research today. That interview will be published next week. And we talk all about it. And that approval is a big signal because, once again, it includes a bunch of altcoins, Cardano, Solana, XRP, and it bodes well for the individual ETF filings approvals, right? So, guys, we're seeing the stage set here for liftoff. I'm excited. It's going to be a fun Q4. One of the things I've been telling you all about is, we'll have to see if Q4 is a local top or the blow off top. We'll monitor global liquidity and all the different metrics. But, if global liquidity is continuing to hit new highs, and we'll have to validate it with other metrics, of course, we could see a local top in Q4 and a blow off top in Q1. Not guaranteed, just a scenario. So as educated investors, we want to be prepared for different scenarios because no one has a crystal ball, but we at least want to validate our thesis with data and navigate the market with data versus feelings and emotions. Oh, it's up today, it's down. No. From the macro, what's happening, right? The short term and micro can certainly fool you, right? We've seen market fakeouts, but the macro, you can really see the bigger trend, right? If you use different data points, if you use different chart analysis, Elliott wave, Fibonacci extensions, you look at sentiment, you look at Google Trends searches, you look at what the whales are doing on-chain data. Are they dumping? Are they continuing to accumulate? So these are the different factors we're going to look at as we get closer. So come along on the ride with me, guys. And look, I'm not the only one. I don't claim to know everything, right? You want to make sure you subscribe and listening to other people as well. But as you know, on this podcast, we're not dealing in conspiracy theories, fairy tales, and all kinds of emotional nonsense. We're looking at data, the charts, and much more to make sure we walk away from this bull market with money in our pockets. If you want fairy tales and fancy stories, go somewhere else, and good luck to you. But if you want to look to make money and make sure we are approaching this from a smart, educated standpoint, then stay with me, folks. Go along the journey with me. Now, look at this. U.S. Treasury opens second round of comments on Genius Act implementation. Now, yesterday I told you all that I've been talking to people in D.C. and many are saying the banks are trying to change the language in the Genius Act because they're getting disrupted, right? And I told you all that Gary Gensler, he went on TV all of a sudden because he's a puppet, and don't be surprised Elizabeth Warren is right behind him with her BS talking points. So they're trying to fight back. And the U.S. Department of Treasury on Thursday opened up a second period of public comment on the implementation of the Genius Act, legislation aimed at regulating stablecoin payments in the U.S. that was signed into law by President Trump. In a Thursday notice, the Treasury said that though the advance notice of proposed rulemaking was not required to implement the Genius Act, it invited the public to comment on the stablecoin law, saying it would build upon its work. The Treasury officially opened up comment in August, giving the public until October 17th to submit concerns or feedback related to illicit activity. The Thursday notice provides a 31-day window for comments. So let's see what they come out with here and how they decide to implement this. But we got to watch out for these banks because, again, I'm hearing in DC, they're trying to fight, change laws. They don't want you to earn yield on Uphold or Coinbase or anywhere else. They want you to go through them. And that's because right now, you can earn more via stable coins and staking and on these platforms than you can in your checking and savings, right? The banks have not been giving us any type of proper interest for a long time. So disruptions at their doorstep. They need to catch up. They need to launch their own stablecoin and start offering people a better product and returns So then maybe people can go that way versus trying to go to political route and roadblock crypto. But they've already lost. They've already lost, right? The legislation's here, crypto's opened up, the president's on board, Congress is on board. So let's see how this plays out. Now, this is interesting. Look at this. CFTC adds crypto leaders to digital asset group. JP Morgan executive tapped for co-chair. This is very, very interesting. The Commodities and Futures Trading Commission, or the CFTC, has appointed new members to its Global Markets Advisory Committee and subcommittees, adding several crypto industry leaders to the Digital Asset Markets Subcommittee, a move that underscores the regulator's continued engagement with the sector. CFTC acting chair Caroline Pham named 4 new DAM's members: Catherine Marinick, chief legal officer at Uniswap Labs; Avery Chang, co-founder and chief technology officer of Aptos Labs; James Hill, managing director and head of structure innovation at BNY Mellon; Ben Sherwin, general counsel at Chainlink Labs. In addition, Scott Lucas, head of digital assets at JP Morgan, was appointed co-chair of the DAMs alongside Sandy Call, executive vice president at Franklin Templeton. So many of you may recall I had Sandy Call on the podcast many times over the year. They succeed Caroline Butler, who previously served as co-chair. It's interesting to see both bank representatives and native crypto industry representatives participating in this council. How times have changed, right? That's because the banks, they are going all in on crypto. And as I mentioned before, they would love to shut some of these small crypto startups and get them out of the way so they can control the market. But I think it's too late for that. So very bullish news here. Look at this. IG Group buys majority stake in Australian crypto exchange Independent Reserve for $72 million. So the mergers and acquisitions, the big investments, the expansions happening globally here, folks. A lot of TradFi institutions and TradFi investors recognize this is the next big macro trade. This is the next tech wave, and they are putting their money in the market. So online trading platform IG Group has acquired a majority stake in Australian crypto exchange Independent Reserve for 109.6 million Australian dollars, which is equivalent to $72.4 million. The deal, the company said, aims to strengthen IG's position in Asia Pacific's fast-growing crypto markets and complements its recent crypto rollouts in the UK and US. This is what you want to see, folks. This is signs of a maturing, healthy asset class and industry where capital is coming in and big players coming in, buying up and trying to launch a service and expand their service. So it is amazing what's happening. Very bullish stuff here. All right, folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Folks, you can support me by subscribing to my free email newsletter. It is 100% free. Check out the link in the description. Also, check out my book on Amazon. It is available in paperback and digital, and my course at mycryptocourse.com. This is a comprehensive course that teaches you every aspect of crypto. So if you'd like to expand your knowledge is power, this is the course for you. Go to mycryptocourse.com. Folks, thank you so much for watching and listening. I appreciate you all, and I'll talk to you all later.